If you hadn't shipped it in, there was a chance for at least a push.
But he did.
But you did.
But I did. What was your lowest round?
67.
Oh my God. Get out of here.
It was crazy because I made 5 birdies in a row.
Oh my
and
gosh.
it was one of those rounds where my putting was like lights out.
Turn. Yes. That worked out great. Dancing.
Dance floor.
Dancing.
What a step into
Yes.
that ball.
Great shot.
Great shot.
Good shot.
Thank you.
Want to give your introduction?
Okay, I'm Jamie Kim. I'm a principal and head of business development with Gallant Capital. We're a middle market fund based in Los Angeles, operationally focused, and so doing deals in tech, business services, and industrials. Let's call it from 5 all the way up to 40 million of EBITDA. Probably looking to write checks like 30 to 40, let's say starting on the lower end. And for us, it's really we're pretty opportunistic. It's more about finding ways to really add some sort of operational value.
Yep.
And so we have a team of in-house operators, like seasoned veterans, like your McKinsey types, who go in. We're not day-to-day working with management teams, but we're more like kind of board level, rigorously tracking to mutually agreed upon performance objectives is how we like to think about it. But again, really trying to create outsized value by coming in there and really applying, rolling up our sleeves, whether it be helping a company with customer concentration, vendor concentration. This could be a corporate divestiture, so helping to carve out a division of a company and helping it stand up on its own 2 feet, upsizing management teams, going after big markets with good secular tailwinds, and looking to really just kind of drive that ops value.
What industry out of all of y'all's focus areas is kind of the hottest right now?
I'd say infra services.
Yeah.
So I'd say anything kind of mission critical, ancillary from all this trade policy and all the issues that are going on right now with tariffs.
Yeah. What would be an
asset light
example?
services to some extent, just given interest rates, kind of where things were. For us though, and we're not contrarian in nature, but we do see value in areas that others don't see that value. And so that's kind of where we really shine. We bought a business with like close to 90% customer concentration, but with contracts that we could really get behind. A good 10-year renewal that we're able to take the bet on ourselves to operationally execute away from the risk.
Yeah.
And so was able to go in there, hire a good team, really juice go-to-market strategy, diversify away from that customer. Ultimately ended up selling the business earlier last year to Standard Aero, which was a Carlyle portfolio company. And so had gone in there and really taken what was, again, 2 brothers running an MRO, and then just supercharging the business.
Yeah.
So a very good win for us, a good win for the founders, and a good kind of use case of what we're trying to do out there, and really create value, not only for us and our LPs, but also the founders that we work with.
With the space y'all plan, how do you think about and go about sourcing?
Yeah. Okay, so we have a very wide funnel, and it's pretty systematic and it's pretty organized. You have your, typical middle market banks, which are, if you look at the data, kind of a lot of the bulk of the deal flow comes from your Bairds, your Blairs, your Lincolns, Williams. And then we have a whole nother funnel of just corporate executives. So we have a team, I lead a team, and we're pretty systematic about making sure that we're reaching out to kind of tier A, tier B, tier C bankers, and then our corporates. We have everything organized by sector, and that way, we can build up intelligence. We can, we can start being a little bit more relevant in our conversations. I think that's how we think about being more targeted in our approach.
Yeah.
And you know, when you talk to, you know, 6 different paper and packaging bankers, and then you talk to the 6 different, you know, major publicly traded packaging companies,
Sure.
you're going to start to look at the patterns and the themes. And so that's kind of how we look at attacking the market. On an interesting note, you know, with founder companies, I'd say our best marketing tools are generally also our MPs. And so it's our deal teams that go out. Founding teams might not take our offers. They might walk away, but most, or rather our most successful deals have also been, you know, deals where founders have come back to us. We have a company, Altify, that's exactly what happened. There's a founding team. Our thesis was take a product-oriented DNA and a team to get back together after they had sold to a strategic.
Yeah.
But they had remembered us, had called us, said, hey, I really like what you guys had to say. We like the operating plan. Ultimately, that ends up being the best marketing for us, is the greater sort of Gallant team that goes out there and makes these relationships at the MPs. You know, I will say on the corporates though, nowadays, a lot of corporates, they're not having auctions. They're going to hire a banker,
Sure.
but they want to know that they had a relationship where there was a private equity fund that was kind of tracking the division, or, you know, they've met the, you know, they know who the firm is. And
Right.
so in that regard, having someone who's in front of the corporates is really important.
Yeah, no, that makes sense. Just having some familiarity, even if you're doing a process, you walk into the room and it's not the first time you've ever met.
Out the gate Fund 2 is off to a really good start, and I'd say it speaks also to our ability to be really creative and flexible. And so, you know, we move sort of where the market opportunities are, and so the last 3 deals that we did were all like carve-outs of sorts. You know, we just invested in a software carve-out that we carved out of Upland Software. It was a team that we had knew and liked before they had sold their company to Upland. And so this is a really exciting opportunity for us to work with them again. Prior to that, we carved out a business from Navient Corporation. We took 4 divisions, which was essentially Navient's government services division. And again, to speak to our ability to roll up our sleeves, took 4 kind of disparate divisions. That in itself is certainly, you know, not for the faint of heart.
Right.
But, you know, that's what we do, that's what we like. We thrive where we can be creative, and I think that's where we really create that outsized value in a market where it's very saturated. And, you know, there's a ton of other, you know, middle market, lower middle market players out there that can speak to doing operations, but I think it's really our ability to be creative and to do these type of deals where, you know, our second deal, we took again a French private equity backed company and merged it with a carve out of a US publicly traded corporation. I mean, very unique. And we shine the best in situations where founders will kind of sit down with us and they'll figure out that we have a really thoughtful, really rigorous operating plan for the business forward, right?
Sure.
These are the founders who get really jazzed up about working with us, seeing what we can do, and just kind of, I know this sounds like such a platitude, but like supercharging the business essentially. Right. We did that with a business called Reveal Data in the e-discovery software space, where the founder had rolled a bunch, really transformed the business into a true SaaS subscription software business. So we brought EBITDA down. We don't have problems bringing EBITDA down because we're really about, again, kind of transforming the business and really meeting the opportunities for the market in the future. And so we took EBITDA down. We bought a processing engine for the tech stack. This was an e-discovery software company, or really more a services company that we really transformed into a software company. And then we bought an AI ML engine, which brought a lot of like sizzle to the business. And then we had another software private equity fund come knocking on our doors with, you know, greater vision, because it was kind of matching up to where the market was going. That's a great example of that's one great example of what we're out there to do, right? And the founder today is now, you know, the CEO of a much bigger platform. So, and I mean, this was all kind of in, let's call it two years of time.
Oh wow, yeah.
With our hold.
What was your entry or journey into private equity?
Very untraditional.
All right.
And it took a long-winded way. So actually, how this all got started was my parents started a Yellow Page business. And so when I was not golfing as a kid, I was actually at my parents' office cold calling for ads.
Oh, no way.
And so they would literally put their yellow page down in front of me, and it would just kind of be like, okay, today you're starting
fill
with
the
like the
pages.
bees, and like see who needs, who wants to put an ad in the yellow pages.
Wow.
And so it was that, and then it was
What good training.
It was great training.
That's incredible.
And I kind of grew up watching them kind of, run a business, and so that's where, and I didn't really even have an option. It's just my sister, like everyone, we just chipped in.
Sure.
And so I graduated college. I played golf in college. I had a injury, I had a back injury that put me out, and then it's kind of like, what do you do, because you've just been playing a lot of golf during college.
Yeah.
So moving to like a big institution like Merrill Lynch was obviously something that was interesting for me, also watching my parents run a small business. And so from that, I had a mentor at the time who was a attorney who basically said, I think you should go work for this one venture capital fund, because he saw me, he was mentoring me in kind of running the family business.
Sure.
So my father had passed away when I was in college, and he kind of took me under his wing and saw me trying to help kind of run this business, and said, I want you to meet a mentor of mine also who will be a better mentor to you and kind of your aspirations of doing business. And so I ended up working at more of a family office, but it was a venture fund. So that was kind of my foray into private equity, and going to like board meetings and just shadowing for 5 years of my life, making early stage investments in tech and like life sciences companies.
Yeah. How cool.
Internationally also. And so that was an entry point, but it always felt like it wasn't traditional, and I felt like I never really had the technical chops to back that up.
In terms of
just understanding the base, accounting, finance, right? And getting that real technical backbone, especially because I was a golfer in college. And so I always wanted to do business school. At the venture fund, my mentor at the time said, this is a total apprenticeship business. Like, you don't need a degree. And I said, you are kind of like this big charismatic guy. I am this small Asian female. Like, I need more like meat behind, meat to the bone.
Yeah.
And so I said, I'm going to do this.
Yeah.
I ended up going to Wharton to get an MBA. I did it while I was working at Platinum Equity. And so Platinum had just closed their second fund at the time and was looking for BD professionals. And so that was really my foray into everything.
Yep.
They liked that I had venture experience. The venture fund was actually a fund of funds as well, and would partner with corporate venture funds.
Got it.
And so I got to know, various kind of corporates from like Best Buy had a corporate venture fund, Samsung had a corporate venture fund, and Platinum being kind of in the game of corporate divestitures, like that I had that broad-based experience. I was at Platinum for about a year. I graduated business school, and I was thinking, time to do something else. I want to extend beyond just doing business development. And so I took kind of what was called like head of strategy and corp dev at like a post-Series D, high growth, like restaurant technology company that was like funded by Sam Altman and Intel Capital, and was supposed to be this big Silicon Valley story.
Yeah.
I feel like that's where I really cut my teeth in learning kind of more so about M&A and finance and sort of fundraising than anywhere else, because I was now on the other side of the table. I was not just kind of like this front of the funnel role, but I was actually doing everything from like FP&A to like that size of company. You're hustling. You're always like one enterprise contract away from becoming this, amazing story.
Right.
We're raising multiple rounds of equity financing from, your typical Silicon Valley sponsors, and then like strategics, like we had a Japanese strategic come in, debt, refinancing debt. I remember calling my mom and saying, I don't think we're going to make payroll, because I was managing cash flows. And so that was definitely those, people say there are years where you're really kind of learning. And those were the years that I felt like I was really learning. And so out there pounding the pavement down Sand Hill Road, asking for money. And then
it's fun.
Asking to refi your debt, getting lifelines, pivoting business models, winning enterprise contracts. And so spent time doing that. And then I got married. My husband lived in LA. And then John Gimble sent me a cold LinkedIn message, John Gimble, who founded Gallant, and said, what are your thoughts about coming back into private equity in a business development role and helping us get Gallant launched and moving to LA? And I said, that'd be great, because I actually live in LA and I commute to San Francisco. And so it's like the moon and stars aligned. You know, I didn't know John directly, but everyone that had given me referrals had nothing but really, really great things to say about Anthony, John, the team, and you know, that's kind of the endorsement that I really needed to give me the push to get back into this role.
Right. All right. Well, last question. If you're entering into the M&A industry, let's say private equity, out of college, without your like background and experience, what would be some advice you'd give someone who's aspiring to be in the industry?
Yeah, I'd say continue to look for opportunities always. You have to you got to position yourself in the best possible way, but aside from that, you have to leverage networks. You have to cold call. You gotta look for those pockets of opportunity, and you know, they'll find you. And if you're set up well for it, then you know, one of the times it's gonna hit.
What about like a skill that maybe you've developed over the course of your career that you found valuable?
I think it's being able to connect with people is a very valuable skill, especially being a female, right, in a pretty male-dominated industry. You know, you're still human, and so it's just your ability to connect and find connections and find angles and find common ground. I think, you know, everything is, you know, my parents always used to tell me business is working with people, and so it's being able to connect with people and form relationships. And have fun. I
couldn't agree more. I think having fun is super important. That's a core tenet written into my business plan. It's like, if I'm not having fun, then no one else that I'm engaging with is having fun, and then why am I even doing it?
Well, there's no longevity in it. So
yeah, no doubt.
And you're just not gonna be your best unless you're having fun.
I think that's true. Anyway, thank you for interviewing with me.
This was a lot of fun.